This is the first time in the company's history that we can go out and do big company style exploration programs on a prospective piece of ground with an already sort of 5.2 million ounce combined resource.
All right, welcome back inside our proactive newsroom. And joining me now is Kiran Patankar. He's the CEO of Maple Gold Mines. And Kiran, it's great to see you. How are you?
Doing well, Steve. Thanks for having me. It's good to see you as well.
Yeah, good to have you along. Excited to learn about a big update you had for the company that you just released a few weeks ago. We'll talk about that in just a second. But first, maybe for those not familiar, tell me a bit about Maple Gold Mines.
Sure. Maple Gold Mines is a district. It's an advanced exploration company focused in Canada. We've got a district scale multi-million ounce gold project. It's called Douay and Joutel. It's located right in the heart of the Abitibi, productive gold bearing region with lots of infrastructure. We've got some great strategic partners in Agnico Eagle, largest shareholder, great institutional shareholders as well. Completely revamped company over the last 2 years under new leadership and new management, new board, tight capital structure, plenty of cash in the bank. So well funded and lots of catalysts on the horizon. I'm very
And you
excited about
couldn't,
it. Okay.
yeah, and you couldn't pick a better jurisdiction to be in. As you mentioned, there's a lot of work going on there.
Yeah, a lot of work. Also, 200 million ounces produced out of the region. So certainly from a prospective geology standpoint, it's very gold rich. But it also, there's a lot of active mines, projects that are advancing rapidly. I would also say that there are really a dearth of 5 million plus ounce projects in Canada with proximity to infrastructure as we are. I think you can count those on a single hand. So I think it puts us in pretty rare territory. I know we're going to talk about the resource update, but Maple it expects to grow that resource with some aggressive drilling planned over the next 18 months, as well as de-risking from the engineering, scoping, and thinking about what this could be from a development standpoint.
Yeah, I want to ask you about the drilling, but before that, let's talk about that update to the mineral resource estimate. It was a significant one. A lot of work went into getting it to the point when you released the report. So tell everyone a little bit about what you're seeing there and all the work that went into this.
Yeah, listen, starting from back in 2023 when I took over as CEO, I mean, we realized that the geologic model had to be updated. We needed a team, obviously, to execute that. We have lots of data, but the hardest thing to do is to take all of that data and to pull it together. Geologists and exploration companies like to spend money drilling and gathering data, but integrating all that data and making it into something cohesive is something that we spent, the better part of a year. We didn't drill a single hole in 2024. We spent time rebuilding the model from the ground up, relogging 30,000 meters plus of core. It led to a great exploration success. Our 2025 winter program delivered meaningful step outs that were impactful on this resource update. The resource in 2026 has been updated and includes a maiden resource at Joutel, which is a high-grade, past-producing mine complex that was operated by Agnico in a much lower gold price environment. We've seen meaningful growth in the ounces at Douay, which is more of it's a bulk tonnage near surface, near 1 gram sort of open pit, with, as we're showing with the drilling, a potential to extend to depth and some higher grade potential bulk tonnage underground. So I guess the takeaway, we'll talk about the numbers themselves. There were dramatic increases in terms of number of ounces, but I think the fidelity of the resource in terms of the quality, reasonable conservative assumptions that were applied, the wireframes and the geological understanding that's sort of underpinning this resource is robust, and it can take us to not only what we're going to do to expand that resource from a point as with our fully funded balance sheet, but also what does it mean from a potential development standpoint? It can underpin that next stage of PEA, PFS, et cetera.
Yeah, when you mentioned the numbers and as mentioned there was a significant upgrade obviously, but do you look at them as two separate projects then, or do you look at the numbers as a combined group or both?
Well, I think it's important that, these two deposits, right, sit on a contiguous 481 square kilometer land package that straddles a productive first order structure in the Abitibi. That's the Casa Berardi. All of that is under Maple's control, right? So these projects, as the crow flies, are, kilometers away from each other. Within, if you think about a central mill concept, they're within, easy trucking distance of each other. Certainly from a high grade underground with infrastructure already established in terms of underground workings, shafts, drifts, etc. I think Joutel, it certainly is something that we should have gotten a lot more value for all along. I think putting out a maiden resource at 1 million ounces at 4 grams plus, certainly it opened some eyes because, as I said, we don't need to put new shafts in place, and it's probably a dewatering exercise and an underground working sort of rehabilitation exercise. But no, we do think about this as a combined resource in terms of, what is the potential blending opportunity between high grade ore from Joutel and this lower grade material at Douay, which we have a lot more of. Obviously, we're focused on growing and expanding the resources at both deposits. And we also, by the way, we have very little of our, sort of 10% of our project at this 481 square kilometer land package has really, been explored. We've got almost 90% of it, including almost 50 kilometers of strike length on the Casa Berardi that doesn't have a single drill hole in it yet.
Mm.
So this is the first time in the company's history that we can go out and do big company style exploration programs on a prospective piece of ground with an already sort of 5.2 million ounce combined resource, that, if you add it all up, I know we need to be careful on some of that, but I think we do see, from a metallurgy standpoint, we need to do a bit more work as we move forward, but we don't see anything that's a fatal flaw as of yet in terms of being able to potentially look at that from a combined, central mill concept.
And you mentioned that obviously you're drilling now, and you've already had some step out success so far. So obviously the drill program is ongoing. It's showing some fruit, which is good. So and it will continue for quite some time, right?
It will, yes. I mean, we had announced a winter program, which we're almost complete with 32,000 meters. That was the
Yeah.
biggest program in the company's history. Just for comparison, the winter program in 2025 was about 12,500. We're drilling
Wow.
better targets based on the geology. We're also drilling more efficiently. So our cost per meter has gone from $400 per meter under the JV with Agnico down to, roughly $300 per meter, despite the fact that costs have increased across the board. So, we're doing 32,000 meters. We've released 28 holes, 14 from Joutel and 14 from Douay. We've drilled almost 60, so there's, another 30 plus holes yet to come. So steady stream of news flow from the drilling. We've defined at Joutel in particular, we've hit the same zone that was part of the main mine horizon, which produced 1 million ounces at 6.5 grams. They use a 6 gram cutoff there. We're drilling areas that were open that didn't have really drill holes put in them. And we're hitting the same zone, with the same sort of grades and thicknesses as part of what they mine. So we see, and these are greater than 100-meter step outs from the existing stope. So we see the potential for Joutel to grow. At Douay, we're following on some very clear plunge orientation, starting with at Nika, in 2025, we defined at hole 338, a 2 gram intercept over 109 meters that included 3 grams over 55 and 5 grams over 17, which is very redolent of that sort of Abitibi bulk tonnage underground. We're stepping out on a known plunge and seeing that repeated. There's some periodicity to the deposit, but there's also a structural fabric that we're seeing repeated in, the 531 zone, the Porphyry West zone. So it's really about systematic testing. We're now extended resources down to 750 meters vertical. We've got a lot of white space to test, not only within that shallow portion, but also as we go to depth. So drilling is going to expand. We'll come out with an announcement here shortly, but I expect to see another potentially 70 to 75,000 meters fully funded drilled over the next 12 to 18 months.
Wow, very exciting. Going to be a fun story to follow as it continues to develop. Kiran, thanks so much. Really great update, and good to see you, and good luck with everything. Again, we'll follow the story.
That's great. We'll look forward to coming back as we have as the project and the company progresses. Thank you for the time.
All right, look forward to it. There's Kiran Patankar, the CEO of the very busy Maple Gold Mines.
The featured company is a paid client of Proactive Group Holdings, and this recording is disseminated by Proactive on its behalf. It is for informational purposes only and does not constitute investment advice, an offer, or a solicitation to buy or sell any securities. Viewers should conduct their own research and consult a qualified financial advisor before making investment decisions. The views expressed are those of the speaker and do not necessarily reflect those of Proactive Group Holdings, trading as Proactive Investors or its affiliates. No responsibility is accepted for any loss arising from reliance on the information presented.